Hello everybody, welcome to the Investenses Weekly Q&A where I answer your top questions and I take the largest number of questions that have most people asking, and because that means it's what's on everybody's mind. And I got a very nice note from somebody on Patreon saying you should call yourself the care channel, the comfort channel, because I seem to care and I bring people comfort when it comes to very stressful investment decisions. So without further ado, we're going to jump in. We're going to start off with a whole bunch of questions. Today we're going to cover NFTs. We're going to talk about why hedge funds are shorting Tesla. We're going to talk about the best way of using your crypto profits to buy things like real estate. Buying a house, which type of mortgage is better? Interest only or 30-year fixed? And for the Patreon Capitalist members, you guys saw me talking a bit about real estate, so that's very relevant there. And then exits. What's the best way to exit a strategy? And I'll talk about that briefly, but I have an upcoming video on that exact topic. And the final question is fun question of the day. So let's jump in and talk about NFTs real quick. So I had a question from Hoyt regarding NFTs, and basically what is the best way to invest in NFTs? And this is such an interesting area, and I've been thinking a lot about it because I've never seen a category blow up like this so fast. And then with all the stuff that's happened over the last week or so, between the NBA and a guy called Beeple selling a painting for $69 million, it's been crazy. So let me tell you, and this, what I'm going to say is going to offend some people out there, but I'm going to say it anyway, because my job is to find the best, safest assets that provide the best return at the lowest available risk. So I personally think the best way to play NFTs is with Ethereum, and I'll tell you why. First of all, if you look at the place exploding, so first of all, the Ethereum blockchain manages everything. All NFTs basically run off the Ethereum blockchain. I'll give you some examples. All the stuff that happened on Christie's, all the NBA's Top Shots, and thousands of other categories, they are all listed using the Ethereum blockchain. So when you talk about other people saying, oh, well, Cardano can do that, they have a newer smart contract, why aren't they in there? And it goes back to my same premise that I've always spoken about, and that is first mover advantage is very hard to dethrone. And that's what Ethereum is. They have the largest number of developments and they have the first mover advantage. And when you think of NFTs, it goes way beyond just art. Think music, think real estate, think insurance. This whole area of DeFi is exploding. And I know that Ethereum has their own problems regarding scalability and gas fees and everything else. And there's some changes coming that are going to hopefully fix a lot of that in the next 30 days and an awful lot more by July of this year. So it's a very, very exciting time. And I've never been more bullish on Ethereum. And the NFT rage that's happening right now is just part of it. So another thing as well that's making me even more bullish on Ethereum is the market for NFTs alone is probably $1 trillion market just by itself. And Ethereum is there. They're in the hot seat. They are the gold standard of all NFT processing, and they will be very difficult to dethrone by anybody else. So net, the safest way to play NFTs would be Ethereum in my opinion, and I recommend that to most people. Now, if you were looking for a token specifically, I've read a little bit about one called Enjin, E-N-J-I-N, and they're supposed to be in the prime seat as well, but more from a video game perspective. But again, the safe play for NFTs has to be Ethereum, and we're seeing that reflected in the price of Ethereum over the last couple of days. All right, second question. Thank you, Hoyt, for that NFT question. Very interesting. Second question is from Catherine on why hedge funds are obsessed with shorting Tesla. So this is kind of an interesting area. So Tesla has been the most unprofitable short I've ever seen, and many people have ever seen. There's been hedge funds shorting Tesla for 4 years, and they've gotten absolutely smoked. But they don't give up. They keep on going. The other thing is betting against Tesla, betting against Elon Musk was considered the widowmaker of 2020. just drove everybody mad. And in addition, Elon Musk was playing with a lot of the shorts by sending them shorts, like shorty shorts, little red shorts with SEXY written on the back. So he likes to have fun with them, and he doesn't like those people at all. So currently, I think there's about 30 billion of Tesla sold short today. That's about 44 million shares. That's down from the high in January of 56 million, when Tesla was right at an all-time high right before earnings. So I think if the higher Tesla goes, if it goes back up to the $850, $900 range, you can expect that short ratio to probably increase over time. But there are big shorts, like Michael Burry, a very, very smart guy, has shorted Tesla. He announced back in November, December, he was going short on Tesla, and he did well because Tesla did fall, but now it's on the rise back up. So that's probably causing some shorts either to get out of their positions or cover their positions from where they are today. Now, if you look at Tesla itself, the company has 22 buy ratings, 42 hold ratings, 19 sell ratings, and who knows where it's going to go. But I think the biggest problem that these hedge funds have is they can't wrap their heads around the fact that Tesla make less than 1% of the cars in the world, and the top 9 other car manufacturers make the balance of the other 99%. And how come Tesla's more valuable than all of them put together? And the answer is Tesla's not a car company, and that's where people fall wrong. It's an AI company. It's a utility. It's an electric storage company. It's a green company. It's a battery maker. It is so many different things, from solar power and everything else. And that's where people fall down. They don't know what to label it. Therefore, they don't know how to value it. And I think that's the problem. So either way, I'm still very long-term bullish in Tesla. I think the sky is the limit. If you saw my Bitcoin versus Tesla video, you'd see some of my future valuation methods. And I know that Kathy Wood from ARK is coming out with some new stuff, hopefully this coming week. So I'd like to see how her numbers compare to mine. Anyway, the other thing actually on Tesla, while I'm on the subject, just real quick, is when they invested $1.5 billion in Bitcoin, that investment has made over 1.08 billion in unrealized gains. And that translates to about $1.12 a share for shareholders. So again, Tesla are doing everything right. The Bitcoin investment was a brilliant move, and they're doing very well from it. So thank you, Catherine, on Tesla. So another question came in from CryptoCare. He asked, is there a way to use your profits on your crypto to be able to do things like buy real estate without paying tax on the capital gains on your assets? The answer is yes. There's a whole bunch of companies coming to the fore. It's a very nascent area, very new to the world. There's companies like Compound, Nexo, Coinbase, BlockFi. As you guys know, I don't sling anything, I don't push anything. These are 4 companies, though, that I do know offer the ability to borrow against your crypto. And what they do is, imagine you have $1 million of Bitcoin sitting in a bank account. They will give you up to 50% a loan against that. So they'll give you $500,000 of fiat, and the interest rates sometimes can be quite high. They're around 11%, 12%, a lot more than the traditional rates. So, but it's much better to borrow that way. Now, the jury is still out on how much you can write off against taxes for that type of interest payment, and it really varies in your jurisdiction. I think many tax jurisdictions around the world are catching up to this whole area. They don't quite know what to do, where to play, so it's hard. But remember as well, if Bitcoin is to fall, you could get a quasi margin call on the amount that you borrow. So for example, if you have $1 million in Bitcoin, you borrow $500,000, and that $1 million value in Bitcoin goes to $500,000, you might have to come up with $250,000 to repay your lender. So that could be a problem. So bear in mind, it comes to this risk, but I'm very looking forward to the day when this whole area is more stabilized, and that'll be a great way to basically use your collateral and your profits from crypto to do things like buy real estate without a tax penalty. Great question. Thank you so much, CryptoCare. The next question is from Jeffrey Ridman. He said, buying a house, is it better to buy with a traditional loan or an interest-only loan? And I made a post about the power of interest-only loans. And let me walk through why I believe it's extremely valuable. So 3 things to bear in mind. 1 is property inflation. Basically, the property that you buy will increase in value over time. Number 2 the interest that you pay on that property is tax deductible. And number three, you got to find a way to minimize your cash outflow so you can use it to invest in better things. So I'll give you an example. Imagine you want to buy a $1 million house and you can get a 10 years interest only mortgage, 10 years fixed, interest only at 2.5%. Your payment is approximately $20,000 a year. Now, if you have a traditional mortgage where you repay interest plus principal, your payment is about $48,000 a year. Again, 2.5% 30-year fixed versus a 2.5% 10-year interest only. That's the difference, 20,000 versus 48,000. So call it, you're spending an extra 30,000 a year in cash flow that's going out. Now, that's not good because you're losing your money. Imagine you put that 30,000 a year into an asset like Bitcoin that generates over 200% a year since inception, but conservatively, let's say it only earns 100% a year. 30,000 invested 100% a year, doubles. Add another 30,000, 100% a year, doubles. Your money, your investment will go from an initial 30,000 after 10 years to $23 million. So think about that, that's staggering. So again, that's assuming 100% return on your money, which is less than half of what you could get on Bitcoin today. So for me, I want to minimize my cash outflow. If I borrow $1 million to buy a house, I know I can repay that back in 10 years with maybe 1 Bitcoin. But it gives me the chance to use that 30,000 savings to buy more assets that I can get better return on. And at the same time, when you look at the $1 million asset that I'm borrowing, assuming a conservative 7% inflation per year over the next 10 years, the actual net value of that amount you're going to repay is about $550,000. So not only you're borrowing $1 million, you're effectively only paying back $550,000 because of appreciation and debasement of the fiat currency. So very good question. Thank you for asking. Okay. The next question is a pretty hard one. I've had this question from so many people. Elizabeth, Daniel, Julian, Brett, James, they all asked me, about probably 100 people, how do I manage exits? So people are sitting on gains right now. They've maybe bought Bitcoin at 9,000, now it's like 60,000, and they want to find a way to lock in their gains because they feel, a bird in the hand is worth two in the bush, which is a very, very good thing to do. So first of all, what I recommend is you've got to think, what are you going to do with the money if you sell? Do you have somewhere else to put it? If you're going to put it in a bank account generating nothing, you may want to rethink that plan. If you can take some of your gains, think about the actual taxes you have to pay on those gains and how much you have left over. And second of all, what are you going to put in? Would you put in an asset like real estate? Maybe then it's a good plan. So you got to think long and hard. But I personally would believe letting it ride, but you could do something very conservative. Imagine you put $10,000 into Bitcoin, shot to 60, you got 50,000 in profit. Take your initial money off the table if you're really worried. Take that original 10,000 investment out. Put it back in your fiat account. I'll let it debase there, whatever. And but then let the other 50,000 ride. That could be one idea. I'm going to do a more detailed video on exits and how I structure them as well, coming soon, so stay tuned for that. But your question is very complex, but I know many of you are worried about your Bitcoin gains right now and you don't want to lose them. So thank you for the question. Final fun question of the day is, what is my favorite place to go on vacation? And that is Bora Bora. And it's Bora Bora because I love the water, I love to scuba dive, I love wildlife, and I love the beach. And it is definitely the most beautiful place on earth that I've ever been to. So French Polynesia, Bora Bora, it's very expensive, but it's beautiful. And I remember the funniest thing there, you could buy a bottle of Coke and it would cost $10. Crazy. Anyway, but well worth it, especially if you like the water, snorkeling, scuba diving, best place on earth. So a big thank you, everybody. As usual, watch for the scammers. And of course, none of this is investment advice. Just me giving you my entertaining position to give you some comfort and guidance going forward without giving investment advice. So thank you, everybody. Take care. Bye.